Welcome to another episode of Fomo or Pass. I'm joined by Brian Evans, and today we're talking to Chris from Rosify, a project focused on-chain scoring and capital-efficient lending. So, Chris, welcome to the show.
Thank you so much, George. It's a pleasure to be here. Brian, it's a pleasure as well. Thank you for having me.
Thanks for coming on. You have 5 to 10 minutes to kind of pitch us your project. What is Rosify all about? And afterwards, then we will take turns asking some difficult questions.
Okay, sounds good. I guess I better crack on with it. So let's start at a super high level. Like what is Rosie? Like what it is that we do. So we're a DeFi protocol that enables highly capital efficient lending markets through on-chain credit scores that are powered by machine learning. So what does that all mean? Highly capital efficient just means loan to value ratios that can go up to 100%. So everyone knows within DeFi, capital efficiency is not that high, meaning if you want a $100 loan, you need to typically offer $130, $150 worth of collateral to be able to get that loan. That's not that's not efficient, but nor is that how we're going to scale DeFi to the masses necessarily. That's where Rosie steps in. How we offer that is through the on-chain credit scoring mechanism. So if you have an EVM compatible wallet that has some history attached to it, then you have the ability to be credit scored and be eligible enough to take out a loan with max 100% LTV. So to date, we have been live. This protocol has been live on Polygon for the last 11 months. And over that time period, we have served 812,000 credit scores through our API. We've issued almost 37,000 soulbound credit credential NFTs. And we facilitated almost 6,000 capital efficient loans, of which 1,600 were under collateralized with collateral ratios as low as 75%. So that is at a super high level, kind of like what it is that we do at Rosify. And I sort of talked about the general problem and premise. But one of the biggest things that we wanted to do with this product whenever we were pushing it out is really make it user focused so that anyone could tap into it and benefit from it, especially whether they want to do their business on chain or they want to be able to take the benefit off chain. And to be able to do that, you need to really have a slick UI that is very user friendly and user focused. So what I would like to do is share my screen just to be able to really paint a tiny picture of like what the UI looks like. I don't want to belabor this point too much because I'm sure that's not what everyone is here for. But again, this has been live in the market for 11 months. We just recently launched on ZK Sync. We're super excited about the developments that are happening on that chain, and we're excited to be a part of it. And we're the only third protocol that launched on it. So here we've got our website, super sleek, sexy, space themed. You can click enter the app, and then you'll come over here. You'll be prompted to connect your wallet address and mint your credit score. You can choose to do so. Also, you can still borrow without minting, but there's tons of benefits to being able to mint your credit score that go beyond just having higher capital efficiency. You can take that and then show it again as your verified credential, not just of credit, but also of reputation and trust, knowing that there's a trust component in taking a really highly capital efficient loan with greater LTVs and then potentially get boosted rewards with some of our other ecosystem partners that we're talking to right now. But quickly plug in your address, you'll get your credit score, you'll have your non-fungible credit score ID, that is your soulbound NFT, and then you can see the markets that are available to you, whether you want to deposit, or you can go here, say, I want to chuck in $100 worth of USDC. I don't have anything in this wallet right now. And then you can choose to deposit. You'll see the terms that will pop up if I had anything, and you can go from there. Or conversely, you can choose to borrow, grab your duration that you're looking for. Let's just say 60 days. Your collateral asset, let's just say wrapped ETH. And then it'll show you like kind of like how do you want to customize it. So I'm a 10, meaning I can only get the bare minimum of a collateral ratio. But if I was scored better, So a 1, our credit scale is 1 to 10, 1 being the lowest credit risk, 10 being the highest. If I were a 1, I would be able to customize this based upon my particular need. So I could toggle the LTV higher and pay a higher amount in interest rates, or I could simply keep it at a lower ratio and pay an even lower amount in the interest rate. It's entirely customizable and selected by the user. And then you've got your general terms where you can borrow, pay for your gas, and be on sort of your merry little way. You'll have your dashboard where it will be able to show your deposits, your loan amounts, your active past loans, the collateral you have staked, also your future Rosie token rewards that you'll be accruing by borrowing and lending on the platform, and then any historical transactions that you may have there as well. So also we have the ZK sync that we can switch over to, which I'll hold off on that. That's a whole bunch of information, but at the crux of it is we're spearheading this next initiative of DeFi 2.0 that actually has a real world benefit by being a user friendly and focused application that gradually makes it less hard for users to want to onboard and participate within, creating credit scores that have utility, not just from a credit capital efficiency perspective, but being able to go around other areas of DeFi and get boosted rewards representative of what you see in the real world. And also a lending platform that steps outside of the Aave compound forks by being able to provide user level customized ability based upon that particular user's history, address, and credit score, so to speak. So I'll pause there. I'm almost 100% sure I went over 5 minutes, but I feel like it was worth it.
Thank you.
Yeah, that was very good.
Very good presentation. Yeah, a couple of questions. So I guess the first thing that I wonder, and I really like this, by the way. First thing I wonder is I remember I used to use Nonsen, and it would, one of my public wallets back a couple of years ago, an NFT bull run, it would track my wallet, and it would categorize me. It would say you're a whatever. I had a high ranking, and everyone would follow my wallet and buy the NFTs that I bought. Kind of reminds me of that, but this is obviously different because it's not just about tracking a wallet. It's about assigning a credit score, and then doing something with that. So how do you, without giving away like a secret sauce, I'm not asking for that, how do you come up with the credit score? How does that work? Is there an algorithm or?
For sure. Let's just see if we can keep it super high level, and I'll see if I can provide a visual here for you as well. So this is an open dashboard that we have. If you just punch in this address whenever you go to the site and you want to hit on the analytics tab, you'll go here, and this is live. You can punch in any EVM compatible address and you'll be able to generate a credit score for it. I just pick one randomly, which I believe has a high amount of liquidations. This is just the first one I could get my hands on. So it might not be the best score. It's a 7, but it paints a picture of what we have down here is some of the features that you look at, and it's like, well, why the heck did that number come out to what it is? And you can see the total borrowed amount and repaid amount comparison. Not that much information that can be gleaned there, but it also can tease out whether this is a bot or likely a person. This is likely a real person, but you can start to look at count of loans, borrowed amount, the repaid amount, the times of repaid. How many times have they been liquidated? A bunch, 16 for almost $230,000. Inability to manage risk particularly well. Sort of characteristic. And then you've got all these different things here as well. So you can look at it from these features, but at the end of the day, it boils down to what does your transaction history look like? Can we deduce a P&L and liquidity profile that can reasonably service the debt you're looking to take out? And the second, have you borrowed previously from other incumbents that are in DeFi and or our platform as well? And have you repaid in a timely manner? That's really what it comes down to.
So the score is essentially assigning what the LTV, what the loan amount will be. Basically, if you have a high score, you're going to be able to receive more based on what you're putting in for collateral, right?
If you've got a better score, that is 100% correct. So the credit score is assigned to the LTV rate that is offered to the user, and then also the interest rate for that particular user as well. So if you have a better score, you're going to get better terms. If you've got a worse score, maybe you don't get penalized or punitive, but you just come in more as a base rate, which would be roughly comparable to what you could get in other platforms, but just sweetened a little bit to be able to move that inertia as to why wouldn't I just borrow from Mavia Compound versus Rosie if you're going to give me the same terms. We just sweeten it a little bit to sort of incentivize.
And one more thing on that, going back to my NFT example, what happened to me was I was aware that everyone was tracking my wallet and buying what I was buying. Then I got sick of it after a while and I started diversifying into many different wallets. So with your system, is it wallet by wallet where you assign the score? Is there a way to string wallets together if I have 10 wallets, or is it just one wallet at a time?
Yeah, so that soulbound credential, like that NFCS, non-fungible credit score, you have the ability to bundle multiple addresses to it, as many as you want to be able to offer the most creditworthy picture of yourself. So you have the ability to do that. In future versions, we do plan to offer some privacy mechanism on that NFT so that this copycat type trading or just essentially slews being able to look at addresses and mimic the different behaviors is private. So you can decrypt that NFT whenever you're looking to borrow from Rosie. We see the addresses, score it again, and then you can go on your merry way and take out a loan. But anyone that is looking on chain will not be able to see that. We don't have that currently, but that is on the future roadmap because we've heard similar, not worries, but similar notions from other people like yourself, but also within our community as well. Not the most pressing, but it's something that I think will be nice, especially as privacy takes more hold and becomes more ubiquitous within the space as well.
Okay.
Yeah, so a few questions. So based on a person's credit score, let's say the most favorable, I think in this case would be 1, right? Not 10.
Yes.
10 is the worst.
Yes, that's correct. It's on a risk scale. So the highest, you are the most risky, and the lowest, you are the least risky.
Okay. So let's say you're least risky. I have a credit score of 1. Like how does that compare to a 10 in terms of collateral you need to put down or the rates? Like what's the gap, the ratio between the two, I guess? Do you know?
Yeah, so quite large. Right now you can get an LTV of 102 with a credit score of 1. So technically slightly under collateralized. And the highest LTV you can get for 10 is 84%.
Oh, okay. So you could borrow 102% if you had a credit score of 1.
Yes.
Okay. So it's slightly over. It's only 2% over, right?
Slightly over. Yeah.
Okay. So how do you prevent, I think a lot of people watching this will probably be a little scared. I mean, DeFi lending is definitely different than centralized lending. We know 2022 was horrible. A lot of black swan stuff happened with centralized lending companies, right? So how do you reassure people that your system has enough collateral overall so that if something bad happens, people can still take their money out?
Yeah, it's a great question. So that's the beauty of DeFi. Everything's verifiable on chain. So, and like to take a step back, the common question is like, well, we can do this or we can do that. So like getting access to the best credit terms is not a God-given right in DeFi. Like it's something that is earned through your behaviors on chain through a long period of time as well. So the age of wallet is a very big factor into this for obvious reasons. So if you're lucky enough to be within like the 3 or 5% of all users on DeFi that would qualify for a good credit score, then you can have access there. So it's not super easy to get that lowest range, first and foremost. The second, from a DeFi perspective, is it's all verifiable on chain. You can see exactly the loan book outstanding, but also the collateral values that are assigned to that as well. And whenever we have the token launched in full, like treasury of the DAO implemented, then you can see exactly what we have in the kitty from a capital reserve to be able to cover any uncollateralized loss losses that would be out there. But we expect those to be very few and far between, given that we've dramatically brought back the risk from a capital efficiency perspective, now only lightly going over, only lightly being under collateralized. But this isn't any different than what any other, sort of traditional bank does on any given day. The only difference is it is decentralized and it is all publicly available and verifiable on chain, but that treasury is meant to grow over time from the lending protocol's revenues to be able to finance buybacks, to grow that kitty so that it establishes and gets bigger and bigger over time. So that number of security for the depositors only continues to balloon.
How do you make money?
The spread. So, right now the protocol is set to take, in its best version, 20% of all interest revenue that flows through the protocol. We're taking a little less right now because we don't have our token launch. We plan to do that very shortly. Once we do that, it'll likely go up to 20%. We also are not charging for our credit scores at the moment. We're just looking to land and expand, but that is something that we'll charge for in the future beyond a certain threshold, because it does take up a little bit of bandwidth. And then also for soulbound tokens, being able to customize it, name it, design it, and everything. Vanity is a very big thing in this particular space so that they can personalize these. And that is an additional revenue stream for the platform as well. We could introduce origination fees at a later date, especially once we start moving back towards under collateralization a little bit more in the future. But that's not on the roadmap for the foreseeable future. Right now, just to be able to keep costs down for the borrowers as well.
And do you aspire to become the industry standard credit score NFT? You were kind of alluding to maybe charging for the mint of that, right? So is that the goal, presumably?
100%. I mean, we'll be the FICO of on-chain data, or the FICO of DeFi. So we are the first to launch this. We're number one to market with credit scoring, but also soulbound credit NFTs. And we'll continue to push that boundary as well. And not only will it be useful for DeFi, but it will be also useful for traditional finance as well, that wants to come in and offer a hybrid product that, for those that are okay with KYCing themselves, to be able to get better terms or different perks or whatever it may be, they can now leverage their on-chain credit score and behavior as well to be able to do that. So an example, hypothetical example, is we've been accepted into MasterCard's Start Path Accelerator. And one of those areas that could happen in the future is being able to marry not just off-chain KYC and credit score, but also your on-chain credit score as well, to facilitate more on-chain credit by combining both, or being able to facilitate more off-chain credit, whether it be through higher credit card limits or maybe boosted perks, whatever it may be, because you now have a greater insight and vantage point into that particular user's creditworthiness, or potentially hidden risks as well. So the use case is endless. We don't want to just replicate what all the other credit agencies do and be overly punitive and black box and charge a bunch of money. But at some sort of future state, there has to be something that is self-fulfilling to the treasury and DAO as well, so that we can make sure we're fully covered, but also at the same exact time, we're continuing to grow to grow the treasury for additional growth initiatives as well.
I think it's a great idea. One last thing, George. So marketing wise, what's the plan there? Like, I think it's a really good concept and everything. And one thing I'm aware of too is there's DeFi users, and I think there's normies that are coming over into DeFi, want to get into DeFi, but it's too complicated for them. Do you plan to cater to that crowd, or are you more just hardcore DeFi users? Obviously, with the credit scores, literally being based on DeFi usage, maybe that's the answer. But is there room to teach people that want to get into it that are kind of not advanced users?
There's an order of operations. Whenever we first started, we thought we'd be able to, shoot all manner of things, do a bunch of different things at the same time. We quickly found out that wasn't feasible. So order of operations is focusing on DeFi native individuals and being able to really show them value there. And then as we do that in the short to like maybe medium term, then we can start graduating towards this educational piece, because we do really truly believe in like bringing more mainstream people in, reducing friction as much as possible, but being able to have some sort of real world impact, because there are efficiencies and benefits that are attached to this that I think are just completely untapped. And we're excited to be like really bootstrapping this innovation, but it's going to take time, and we'll have to eat in like what's on our plate with DeFi natives right now, and then eventually be able to expand out at a later state, which we're excited to be able to do so.
Just a few final questions from me. I think you're talking about your credit score and being able to like kind of showcase that, almost like I'm picturing almost like a badge of honor sort of, kind of in that scenario where people can like show off like, hey, look at me. I have a top credit score from Rosify. You mentioned about customization too. Was that what you were leaning towards, like for people to be actually, be bragging about their credit score? And how can people customize it?
So yes, that's 100%. Like we want people to be able to brag. We want people to feel confident in it, because not just is it credit, like it's weird because in the real world, a credit score isn't necessarily a sexy thing,
No.
but given the anonymity and sort of nefarious nature sometimes of blockchain activities, like being able to have a credit score that also has reputation and trust attached to it for the higher level borrowers, whenever you're really pushing that LTV, that means something, especially if you choose to have your privacy and not attach KYC to anything. So that means something, especially if you really want to have an impact in the space, whether it's through governance, voting, getting a job, or whatever it may be. So heck yeah, we want this to be as sexy as people style up their ENSs with all sorts of creative names and everything else. And the second piece is like, well, how can we go about doing that? That's like the second port of call after we launch our token, is to be able to offer those different imageries, but also naming options. We already have it keyed up. We just need to press go on it. We've sat it to the side to again, order of operations, but that'll be something that we'll be rolling out soon. And I'm excited about it. Something that was requested, and I can't wait to see it hit center stage.
So I picture because right now within your platform, you have your own kind of lending system, right? So you can borrow USDT, USDC. There's collateral you could put down, like wrap Bitcoin, wrap ETH. But is the bigger picture here that I think you already talked about it. The bigger picture is to get people to utilize your credit score so that other lending projects can also utilize that, right? So like the Aves and the Compounds of the world, eventually, is that the game? Is like you want to expand out your credit system so that everyone can utilize it? Is that something that you guys are thinking about?
Yeah, absolutely. So like this should be a common good. Again, we don't want to replicate what TradFi credit bureaus do, to where all the value accrues to us and then everyone's sort of left in the lurch. Like our long-term vision is to be able to decentralize the scoring infrastructure, but also like the modeling as well, to like the hive mindset. There's tons of smart people out there in the world. Doesn't necessarily mean that they're all on Rosie's payroll. So that's a grand vision, like with our token being the mechanism to be able to do that and then vote it into governance. But with that being said, like this should be a common good. This shouldn't just be something that can be here. Rosie token and the protocol will still accrue tons and tons of value, because we're that base layer. We put in the hard work and got in the arena to bring these two innovations to life. But it should be a common good for the Aves, Compounds, the Venuses of the world to be able to tap into our scoring system, to maybe not go as far as we are because their systems aren't built for it. Because I mentioned that previously, there's shortcomings in the Aave Compound forks design, but maybe you can adjust and push that boundary a little bit more to meet a need for your users, which is clear and they've requested it, while not putting your protocol at unnecessary risk as well, and generating more revenue for the treasury as well. So this is something that we're actually speaking with a lot of lending protocols right now. We're trying to go to some of the top bigger guys, Venus on BNB chain is one that we're engaging with. We've did an AMA with Radiant a while back, Radiant Capital and Arbitrum. So this is something that has been in the works, and we're looking to push it forward after token launch. Because like I said, it should be a common good, and I'm excited to see the value that it can bring, not just like within Rosie, but also within the greater DeFi ecosystem as well, with our FICO scoring being kind of like that linchpin to push it forward.
Okay. Brian, any other questions?
Awesome. Thank you.
Final question. So you mentioned about the Rosie token. When is that being launched?
So right now we plan to launch the Rosie token the week of June 12th. So we're about 2 weeks out, and it is rapidly coming. We've already started to preempt our users by saying, hey, you can begin to accrue your Rosie rewards now, even before the token is out, sort of like a preemptive liquidity mining program. But by the time, I think this is the first time we mentioned it, but by the time this is out, we'll likely have made some announcement around the specific date. But yes, it'll be the week of June 12th. So approximately 2 weeks. Very, very excited about it. It's going to open up an entirely new world of things that we can do. And a lot of the stuff I mentioned previously on the call really is going to be, is really going to, it's like jet fuel with that token.
Okay. Well, thanks for explaining Rosify, Chris. It's time for you to drop off, and then Brian and I will talk about whether or not we're go Fomo or pass.
Appreciate it, Chris. Thank you very much.
Thank you so much, gentlemen. Make sure you go FOMO. Appreciate it.
Take care.
Cheers.
Thank you.
All right. So what do you think?
You know, I struggle with DeFi lending sometimes, because at the core, what DeFi lending used to be was just a way to basically say, okay, I've made some money that's not realized gains yet. I don't want to pay taxes on it, so I'm going to take a loan, which is not taxable, and then use those funds to do something else. That was basically the sole purpose of DeFi loans, other than looping other assets through others to take basically leverage. But what caught me here positively was that they're willing to do under collateralization and the credit score NFTs. I think that's a big monumental task ahead of them, of doing credit score NFTs and trying to become the de facto credit score NFT in the industry. I do think it's a worthy thing to be doing. I haven't seen a lot of others willing to do under collateralization. I'd be very curious to see what it takes to actually get those, get that 102% rate. Because obviously it's risky. Someone could just say, great, here's $1 million. I'll take my $1.2 million now, or whatever the numbers come out to. And it would be a little bit less than that. It'd be 1,020,000, I think.
Yeah.
But either way, it's like if people could just, game the system if they have enough money and just keep taking it, that would obviously not be good. But I'm sure they've thought of that. But I generally do like it. But I do think they have a very big task ahead of them. I think it's a worthy one, though, at that.
Yeah. I mean, that's why I asked the question about, like, if your credit score was like the best, how much can you take out?
Yeah.
So I like the fact that it's only 102%. So you're really the under collateralization is by like 2%, right? So
yeah.
And I like how he said that, of course, not everyone is going to achieve like a 1 score. I would like to think that most people that are doing their soulbound NFT would probably be toward the bottom, so that they're putting more collateral than needed for loans, right? So I like that, but I think that the bigger picture, that's what I'm thinking about, is like right now in DeFi, there really is no product like this where, you go to different DeFi projects and they're all kind of secluded, separate, right? They really have nothing to do with each other. And this can commonly bond everything, so to speak, with this new credit score, if they do adopt it, but I think that's a cool concept, and I know some people will probably be turned off because they don't want to showcase who they are. But if they release their like privacy, like so you could hide your thing, it could work, right? It could work.
It could. Yeah. And the other thing that was positive for me was that they would allow multiple wallets. A lot of these other protocols, you can only connect one wallet, and it's just a game of like, how much money do you have? What other asset can you swap it for? And what does that do for you? And really previously, the only use case was, I don't want to pay taxes and I'm going to take a loan on my assets and try to make more money before I have to pay taxes. Or swap it for some other more obscure asset or something like that and try to loop it together on some other protocol, which is a whole other kind of industry.
So, I mean, overall, I think, like you said, I think they have many challenges ahead, but I'm going to say FOMO because I like what they're doing and I think it could work. What do you think?
Yeah, absolutely. I'm going to FOMO as well. I definitely would be curious to learn more about how they score the privacy, how they score the wallets, and what it takes to get to that top best tier. And I think that's going to be an important thing. I think people are going to want to know, like, how do you get in? Is that the top 0.01%? Is that the top 1%, top 10% to get into that top tier? I think people are going to want to, do that. And I think that could be a unique advantage of them if they're willing to lean into that under collateralization. Maybe they could tie in their own token a bit with the under collateralization, where you have to stake some number of their tokens on top of putting up some asset where the stake tokens earn some money. There might be like a really cool tie in there that they could actually lean into and be different than all these other protocols that just basically, here, give us 100, give us 10,000. We're going to give you 9,000,
right,
in a different asset just so you can go swap it and not have to pay taxes. So I do think, because there are some protocols out there that are doing lending that are solving problems that don't need to be solved, but I don't think this is one of them. So I will FOMO on this too.
Yeah, I actually, I'm curious because I want to, he mentioned that you could do the soulbound NFT credit score right now for free.
Yep.
Of course, I'm sure you just pay a little gas fee, but yeah, I want to do it just to check out my own score and see, see what I score.
Same.
Right.
Same, absolutely. There could be like a badge of honor, like you said, of having one of these top credit score NFTs, even though it's soulbound and you can't trade it unless you give someone your whole wallet, which is obviously risky. Maybe what they could do, this is a free marketing idea, is they could make those NFTs, even though they're soulbound, you could have like PFPs or something really unique and exclusive for those top tier ones. So then people want to rock them on social media and really show off why, that they're in the 1% or whatever it is, 0.1%. Or even just in any other tier, they could have 10 tiers. They do have 10 tiers, right? So they could have 10 different tier classified NFTs. So it gets me excited from a marketing standpoint, because I think there's different things they could do there on the marketing side that would showcase those tiers and make it an exciting gamified thing rather than just some boring lending protocol, which there's too many of already. So for that reason, I do like it.
Cool. Well, it sounds like we both agreed to FOMO. So if you're watching and you do like it, make sure you check out their website in the description, Rosify, and make sure you smash up the likes, subscribe to the channel, and we will see you guys next week.
See you later.
Bye.